It's Monday, the 27th of September 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Australia's resources sector tumbles as the global growth story and doubts over China hit shareholders hard. That's our main story. Also today, Victoria and New South Wales talk about easing restrictions, the housing market has a cracking weekend, and why Europeans love Australia's vast space. Then stay listening for Sean's chat to Jason Cooper, the CEO of EnviroSuite, about incredible innovations in noise and water pollution technology. It's an ASX-listed company picked out as one to watch. But first, Sean, we talk about the resources sector being fundamental to our economy. And in many ways, it's really helped us to manage the COVID crisis, at least economically. But it seems the market has gone south over the past few weeks.
Sure has, Michael. Fears about China slowing, a global shortage in semiconductor chips, restrictions on steel production, and a sudden dislike for gold companies has hit shareholders hard because a bunch of stock prices of mining companies have fallen. Australian investors, even if it's through their super funds, tend to invest in financial service firms like the big banks and mining and exploration stocks, but it's just been a really bad investment over the past couple of months. The iron ore miners, we've spoken about this a bit, they've tumbled alongside the price of iron ore. The commodity is now trading at half the level of 4 months ago, and the big miners have gone for a fall as well. Fortescue Metals is at a 52-week low, having lost about 40% of its value since mid-July. BHP, which does much more than mine iron ore, is down 20% in the past 7 weeks. In the same period, Rio Tinto is off 24%.
You mentioned gold companies. What's happening with gold stocks?
It's actually a really good question. Share prices of gold stocks have fallen much more than the price of the precious metal itself. Uncertainty should help gold stocks, but it hasn't. Many of the gold stocks are trading at their lowest level since the start of the pandemic. And if you exclude the plunge that happened around March last year, they're actually at their lowest level since about 2018. Market leader Newcrest Mining is down 35% in just 5 weeks. Northern Star is off 20% in the last 10 weeks. The price of gold has come off, but just not by that much. In fact, Northern Star, Regis Resources and Evolution Mining are 3 of the 5 worst performing stocks on the ASX over the past year. Add to that the energy companies, and they can't find a friend at the moment, and even the battery metals companies, which over the last 12 months we've been talking about how well they've done. In the last 2 weeks, Pilbara Minerals is down 13%, Orocobre is off 8%, Lynas Rare Earths is 11% lower. They do jump around, those guys, but still the sell-off is quite amazing.
So the big question then is, what do you expect? What's going to happen?
Another good question. Do you buy on the dips? Will the economic recovery gather speed and help the mining stocks? Has the recent boom in the sector come to an end? I don't know. It's going to be a very interesting few months.
Yeah, we might try and find an expert who's able to help us out with a few of those questions later this week. So how then did equity markets perform over the weekend?
Well, the S&P ASX 200 finished down 0.4% on Friday to 7,342 points. For the full week, it was down just a bit under 1%, which wasn't a bad effort given how far it fell a week ago last Monday. A notable drop on Friday was hearing implant maker Cochlear. Its share price fell almost 5% after it said a complaint for patent infringement had been filed by the University of Pittsburgh in the US. Cochlear said it will defend the allegations. Wall Street was up slightly over the weekend while European markets were a touch lower.
We'll be back in a moment with the rest of the day's business news. Sean, another glimmer of hope. Prime Minister Scott Morrison has said he'd like to give people their lives back by Christmas.
Is that a gift that Scott Morrison can give us, Michael?
I don't think it is, but he's going to try.
He said that, but then he put the responsibility fairly on the state premiers. The Prime Minister said we needed to get back into top gear while living with the virus. He hopes lockdowns will be ended by Christmas when the country has passed an 80% vaccination rate, but he very much said that's up to the states.
So how are we tracking in that regard? Are we getting there?
We are getting there. There are still plenty of cases. New South Wales daily case rates remain steady around the 1,000 mark. Yesterday, Premier Gladys Berejiklian said even though the state was close to a 60% full vaccination rate and should hit 70% within a fortnight, She was worried about the lag in vaccination rates in some rural areas that might prevent people from Sydney, for example, travelling to other parts of the state. Infection rates around the Central Coast and Illawarra regions of New South Wales, that's north and south of Sydney, are accelerating, and there are also areas which are very popular summer holiday destinations. New South Wales will outline what happens once the 80% vax rate is hit later this week, Ms. Berejiklian said, and also what unvaccinated people will be allowed to do and not allowed to do. In Victoria, the case numbers fell to 779 yesterday. That was down from 847 on Saturday. But unfortunately, the trend is still up. That state expects to hit 80% first dose tomorrow. And Daniel Andrews, the Premier, said there should be a modest easing of restrictions from Wednesday. The Australian Capital Territory had a total of 57 cases over the weekend. Most of those were in the community while infectious. That's not such good news. But more than 85% of the population have now received one jab.
Now, Sean, last week we were talking a fair bit about property, and there were warnings from the Reserve Bank, from the Commonwealth Bank, and from ANZ, and even from the International Monetary Fund about the soaring housing market. We're now well into the spring selling season. What were the auction results like over the weekend?
No one was listening to the banks, clearly. It was a great weekend. Sydney's property market posted its best clearance rate since April. That's 84.3%. These rates are preliminary, so they will come back a bit, but still the outcome is really, really strong. The national rate was a very impressive 82.4%, with a big jump in Melbourne, which had fallen way back. Now, the ban on home inspections has been lifted in that state, and over the weekend, 77.2% of houses that went to auction were sold. That's the best since May, and those figures are according to CoreLogic. Now, of course, this all comes on, as you mentioned, what the Commonwealth Bank, the ANZ and Reserve Bank said last week about fearing Australia's becoming too indebted. And over the weekend, the International Monetary Fund, its job is to ensure financial stability around the world, it said Australia needs to address the rising risks posed by higher house prices. It too is worried that people are getting themselves into too much debt. All in all, it was a really good weekend for sellers. There's not as much stock on the market, so it is a good time to be selling, and that's helped clearance rates. But maybe people are also just getting in ahead of the tightening of any rules that might occur, just maybe.
Now, beyond house prices, the IMF had a bit more to say about Australia as well.
It did. It also warned that there'd be a reckoning for zombie companies when government support is withdrawn from the economy, and that could mean a spike in corporate insolvencies. Remember, we expected a big spike at the beginning of this year. In fact, at the end of 2020, we interviewed a couple of people about how they expected a big jump in businesses either going into liquidation or going bankrupt, but it just never happened. Government support is continuing to hold up companies that would otherwise have gone bust, and the IMF is worried that actually when that support is taken, those companies will go bust. The IMF also called for tax reform, saying Australia needed to reduce income and corporate tax rates and lift the GST. We've heard that record before, and it never seems to happen.
Now, staying with property, and I know this is a bit of a stretch, a bit of a tenuous link, but a big German group wants to buy up Australian renewable energy farms. What's going on?
Well, farms are property, Michael. You're probably right. It's an interesting case. A crowd called ACE Power, ACE Power, is a German-backed renewable energy developer, and it wants to spend about $2.5 billion in the next 3 or 4 years buying up wind, solar and storage projects in Australia. It believes as coal plants shut down, there's huge opportunity if you own renewable energy in Australia. There's a few things going on here. Last week, Energy Australia said it was bringing forward the closure of the Mount Piper coal-fired power station in Lithgow, west of Sydney. The Yallourn power station in Victoria's Latrobe Valley will also be closed earlier than first thought. Investors don't want to put money into fossil fuel companies at the moment, and you can see that because coal and oil prices are high, but the share prices of the companies that get the stuff out of the ground aren't. So, fossil fuels are on the nose. Then you have Australia as a nation with plenty of land, plenty of sunshine, and plenty of wind. That means plenty of opportunity to build renewable businesses.
Yeah, but why a German company? What's the significance there?
Because they're really good at it. Europeans by far are the best in the business when it comes to renewables. North Americans, Asia, Australia, none of us are particularly far advanced in developing these sorts of facilities, but the Europeans have been doing it for decades. This German company Ace has obviously looked at Australia, seen the opportunity, and I reckon it'll be the first of quite a few European companies that head down under and start looking for opportunities.
Okay, Sean, what's making headlines today in the news media?
The Financial Review is reporting this morning that strikes in Australia's ports are likely across the month of October, delaying the delivery of goods such as furniture and electronics and toys ahead of Christmas. The Maritime Union of Australia has already notified that hundreds of wharfies will strike for 48 hours in Sydney's Port Botany next weekend and for 12 hours every Monday, Wednesday and Friday in Melbourne for the whole month of October. The Financial Review is also reporting that Hungry Jack's, the burger chain, is going into chicken. Owner Jack Cowan wants to take share off KFC. He's worried about the soaring cost of beef, and he also appreciates that people are eating more chicken. And The Australian is reporting that Australia's biggest hydrogen developers have called on the Morrison government to create a $19 billion net zero fund aimed at cutting emissions and speeding up the rollout of hydrogen-based fuels to the steel and heavy transport industries.
Running through some of the other stories around today and over the weekend, Barnaby Joyce was doing the media rounds yesterday and said he was in discussion with the PM on a plan to get Australia to net zero emissions by 2050. Words I suspect not many of us ever expected Barnaby Joyce to say.
No.
He said the National Party was looking through the lens of making sure there weren't any job losses in regional Australia, which makes sense.
It does make sense, but I'm not sure how you go from one industry to another industry and not have job losses. So good luck on that. Westpac Chief Economist Bill Evans, he still thinks the Reserve Bank will lift interest rates in March 2023. Now, that's ahead of the central bank's own timetable of 2024. But Mr. Evans is confident the economy will do better than the central bank expects. And he has a pretty good track record in these sorts of things, predicting interest rates.
Yeah, and last week we talked about the banking industry appearing before the Parliamentary Joint Committee on Corporations and Financial Services inquiry. Quite a mouthful. But on Friday, the Australian Banking Association appeared and it said the industry was actively looking at options that use technology that could be used to basically block credit card use in gambling. Interesting stuff.
It really is. Also, APA Group said if it was allowed to buy AusNet services, this is the big takeover we spoke about last week, it would create a $35 billion flagship Australian energy infrastructure business. That would be the biggest listed infrastructure company on the bourse. APA, of course, is in a tussle with Canadian giant Brookfield to buy the AusNet business.
Yeah, and one more. This is from the Bureau of Statistics. They released some data late last week on the change in hours worked by different industries, comparing basically the month before COVID to August. Not surprisingly, hours worked in accommodation and food services and arts and recreation all tumbled, but there were more hours worked in rental, hiring and real estate services and in public administration and safety.
Perhaps not a surprise, that last one.
Yeah, probably not. Now, what's the key overseas news this morning?
Well, it's a really big week for US President Joe Biden. 8 months in, and his popularity is waning big time. This week, he's supposed to be negotiating a $1.2 trillion infrastructure bill, but much of the debate is within the Democratic Party. It's actually a bipartisan bill between the Republicans and the Democrats, but within the party itself, they're upset about what's being spent. He also needs to avert a federal shutdown by raising the debt limit before Friday. The withdrawal from Afghanistan is still not playing well in the community. The COVID news isn't great. And there's a rush of migrants from Haiti after some dreadful natural disasters in that country. The honeymoon for Joe is well and truly over. The German election was held over the weekend to find a replacement for outgoing Angela Merkel, one of the globe's leading statespeople for more than a decade. As we go to air, it's not clear who won, the centre-right CDU-CSU party or the left-of-centre Social Democrats. And one of my favourite stories over the weekend was the push by the European Union to require the smartphone industry, Apple, Google, all the Android devices, to adopt a uniform charging cord. Michael, I'm sure you're like me and you live in a household mixed with Apple and Android devices. This could be a lifesaver, you know. Or, mind you, it possibly could cause more fights over who has the charger.
Sean, I know it's only Monday, but this could well be a front runner for my favourite story of the week. This is one of those common sense things that if the European Union manages to pull this one off, then they're onto a real winner there.
Absolutely.
Now, up next is the Daily Interview, and today you're talking to Jason Cooper, the CEO of EnviroSuite. Now, this is a company that Matthew Kidman from Centennial Asset Management mentioned a few weeks back.
Sure is. It's one Matthew was keeping an eye on. EnviroSuite basically comes with high-tech solutions to environmental problems. So, with companies and cities around the world starting to face up to a lot of environmental challenges, EnviroSuite's in a very good position to make the most of it.
Yeah, interesting one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. While you're at it, why not check out the week ahead as well with our resident economist, Stephen Koukoulas. What's coming up this week, Sean?
Well, retail trade figures for August are out, same with job vacancies and RBA credit data, and of course, CoreLogic house prices.
Yeah, plenty to discuss. That's Fear and Greed the week ahead with Stephen Koukoulas. That's also on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Enjoy your day, Michael.
It's Monday, the 27th of September, 2021. Make sure you followed Fear and Greed on LinkedIn, Twitter and Facebook, and you can always find more info at our website, fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.